Nasdaq has received regulatory approval from the SEC to launch Bitcoin index options on the Phlx platform. These options are cash-settled, meaning no actual Bitcoin is transferred upon exercise. Instead, contract holders receive a payout based on the difference between the Bitcoin market price and the strike price at expiration. The underlying benchmark for these options is the CME-CF Bitcoin Real-Time Index, which aggregates price data from major exchanges at 200 millisecond intervals. Each Nasdaq instrument represents 1/100th of the index value, and trading will occur under the ticker symbol QBTC. The SEC's approval was granted through an expedited process, with documentation appearing on the regulator's website late last week. The options are European style, meaning they can only be exercised on the expiration date. Settlement occurs entirely in cash, and position limits are capped at 24,000 contracts per account side, or about 0.12% of the total available. The move reflects a more accommodating stance from the SEC under Paul Atkins' leadership, who has shown a willingness to engage with cryptocurrency markets. However, trading remains on hold until the Commodity Futures Trading Commission, CFTC, also grants approval. This regulatory development could signal broader institutional acceptance of Bitcoin as an investable asset. It also introduces a new financial instrument that allows traders to hedge. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Or speculate on Bitcoin price movements without directly holding the cryptocurrency. The cash-settled nature of these options may appeal to institutional investors who prefer not to deal with the custody and security risks associated with holding Bitcoin. The use of the CME-CF Bitcoin Real-Time Index as a reference point ensures that the options are tied to a transparent and widely accepted price source. This could help reduce volatility concerns and improve market confidence in the product. However, the absence of CFTC approval means that the product is not yet available for trading. The CFTC's role in overseeing derivatives markets means that any final approval will likely come with additional scrutiny. The SEC's authorization is a significant step forward, but it is not the final one. Market participants will be watching for the CFTC's decision closely, as it will determine when and how these options can be traded. The approval also sets a precedent for other exchanges seeking to introduce similar products. It could encourage more traditional financial institutions to explore crypto-related derivatives, potentially increasing market liquidity and participation. The QBTC ticker symbol will serve as a key identifier for these options once trading begins. The minimum price increment of 1 cent and the position limits suggest that the product is designed for institutional and sophisticated retail investors rather than casual traders. The 24,000 contract limit per account side is relatively small, indicating that the product is intended to be a niche or specialized tool rather than a mass market offering. The European-style exercise mechanism, which restricts exercise to the expiration date, adds a layer of complexity for traders. This feature could influence trading strategies and risk management approaches. It also aligns with conventional options markets, where European-style options are common in certain asset classes. The SEC's expedited approval process suggests that the regulator is trying to keep pace with market developments. This could indicate a broader shift in regulatory attitudes toward. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Crypto, though it is still early days, the approval does not guarantee success for the product, but it does open the door for further development. The next signal to watch is the CFTC's response. If the CFTC grants approval, the product will move from regulatory authorization to active trading. This could happen in the coming weeks or months, depending on the regulator's timeline and any additional requirements. The outcome will determine whether this product becomes a viable tool for institutional investors and whether it leads to more innovation in crypto derivatives. Until then, the market will remain in a holding pattern, waiting for the final regulatory nod.